Hi, everyone. Happy Monday. We are doing this today because I'm getting a ton of questions over the past week from my referral partners, from my clients, especially this weekend when this headline came out. This is probably going across most of the news channels talking about mortgages to increase for credit scores over 680, 740 FICO score pays 1% fee, 620 gets a 1.75% fee discount. Now, when you are looking at these percentages, this does not affect the interest rate directly. These are loan level pricing adjustments that are into play now. They've always been into play. It's just for those with higher credit scores, you might be paying a little bit more. When I'm talking about a little bit more, it might affect the interest rate maybe by 0.125. So it is already built into our pricing model for those that I've been quoting over the past 45 days, but it's just becoming effective. Well, who made this change? It's the Federal Housing Finance Agency, and they feel that they're going to help those that have a 680 or a lower credit score and taking it from those that have a higher credit score. I don't agree with what they're doing. They feel like it's going to make a difference. I don't. I really don't, because it's minimal. And experts like David Stevens feel the same way. So we're going to dig a little bit deeper on what this really means. So let's take this headline away, and let's go over to this hot cold chart that was created for new versus old loan level price adjustments. Now, for those the ones that are highlighted in bright green or green, it got a better, it's gotten better. For those that are in red, it's gotten worse. So as you can see, for those who have you got your credit scores here and your loan to values, this is based on your down payment. So those with below a 680 credit score, putting at least 25 or anywhere from 3% down to 30% down, you're going to see better pricing. So for example, if you have a 5% down payment and a 660 credit score, you're going to see a 1% better loan level price adjustment than it was before. So ultimately that's going to affect your interest rate a little bit. But I'll go through on the next screen. Those pricing adjustments have always been in play. It's just going to get a little bit better. So if those it's hurting the most are 720 to 760, 780 credit scores for those who are putting, anywhere from 10 to 20% down. So that's going to affect the pricing when we're quoting interest rates. Ultimately, they've always been there. It's just get some. Some are getting better, some are getting worse. And let's take a look at what it really means. So I'm going to zoom in here. So those that have lower credit scores still have higher pricing adjustments than those that have higher credit scores. It's just before they were different. And Fannie Mae and Freddie Mac have programs available out there that don't have these loan level price adjustments. So for example, there's a first-time homebuyer cap for those borrowers that are making under $105,000. These loan level price adjustments are not even there. I think it's very important for you as a client or our realtors out there to talk to a professional that understands what's going on so we can explain this to our borrowers. Again, it's not affecting the interest rate percentage. It's affecting the pricing model and the loan level pricing adjustments that we're quoting our clients. We've already been quoting our clients, this for the past few months. Again, don't assume by reading the headlines. Contact a professional like myself to walk you through every step of the way when you're buying a home. Thanks again, and I will see you on Midweek Mortgage Talk. Join me on Wednesdays.